Hey guys, hope you are all having an amazing day. Today, we need to go over one of the best investments you can begin to make. This video will be long. We are going to cover a ton of information, but you will significantly benefit from what I am about to tell you, so please do devote time to listening to the entire thing. You see, while the stock market has been raging on and upwards, this particular company we will talk about today has had a lot of negative press, failures and even government pushback. This company is called Google, one of the largest technological companies in the world, and out of the top 10 companies in the world, certainly the worst mismanaged. In this video, we are going to cover its current products and services, financials, future catalysts, financials and upcoming products. The goal of this video is to inform you with cited sources as to why Google is simultaneously led by the worst CEO and is the best investment to make. As always, I ask of you three small things: drop a like on the video if you find it informative, leave a comment down below to help boost it in the algo, and join our ever-growing Discord linked in the video description. Google, which is actually known as Alphabet after their restructuring back in 2015, is a huge conglomerate holding company, the third largest technology company by revenue and the fifth most valuable company by market capitalization as of March 4th of year 2024. It operates Google Services, Google Cloud, Ads, Android operating systems as well as the Pixel phones. They own Chrome, Gmail, Google Drive, Google Maps, Google Play, Google Photos, Search and obviously, YouTube. When it comes to services, this company slaps, and holds ownership to a vast array of segments to which it barely has any competition. According to StatCounter, at a global scale, Google.com has a market share of 91%. That is, over 91% of people in the world use the Google search engine over all alternatives and competitors combined. YouTube, arguably the most influential platform in the entirety of the internet, has an immense reach, with an impact on the internet landscape to which no competitor can compete. Let me bring you up to speed with some impressive facts. YouTube users are almost about a third of the internet, around 1.9 billion people. About 1 billion hour worth of YouTube content are consumed per day, with an average visit length across devices being about 36 minutes. When you look at the most visited websites by traffic for the month of January this year, the steep increase from the third being Facebook at 18 billion to the second being YouTube is absolutely insane, over 90 billion more visitors. That is 6 more times than the third most visited website. And as shown, the most visited website in the world is the search engine Google.com itself. FYI, shout out to Cornhub at spot number 4, fantastic nightly happy hour content for all the single people out there. A lot of these things you already knew, but it's important to point them out for two reasons. One is that it will give us content on how we are going to perceive Alphabet's current weakness in the market, as well as illustrate how some of its lesser-known services and products being worked in the background are bound to position this company to success like it's never had before. For all its achievements and global domination in these services, I have come to learn that Google's best days are not in its past nor in its present, but in the days ahead. A little-known fact that many people omit from acknowledging, and I would even dare say the market hasn't even fully caught up with it, is Google's Waymo. Waymo is a self-driving car project owned by Alphabet that aims to create autonomous vehicles for ride-sharing and delivery services. These specialized cars are equipped with sensors that include cameras, radar, and lidar, which stands for light detection and ranging technology. Because of the robust advancement in technology, which Google has been working on for years now, Google's spin-off robotaxis have actually led to a significant reduction in injury-related and police-reported crashes when you compare them to human benchmarks. You see, it's not only about increasing profitability and revenue, but improving cost-effectiveness overall. For many years, Google's Waymo has claimed that core to the goal behind this project is to have driverless vehicles that are safer than humans, and now, for the first time ever, we actually have data that backs it up. Waymo's analysis of 7.13 million fully driverless miles across Phoenix, Los Angeles, and San Francisco suggests promising results regarding the safety of their autonomous vehicles. The conclusion drawn from Waymo's analysis is significant. According to their findings, Waymo's driverless cars were 6.7 times less likely than human drivers to be involved in a crash resulting in an injury, representing an impressive 85% reduction over the human benchmark. Additionally, they were 2.3 times less likely to be involved in a police-reported crash, indicating a 57% reduction compared to human drivers. These statistics translate into tangible outcomes: an estimated 17 fewer injuries and 20 fewer police-reported crashes compared to if a human driver had covered the same distance in the cities where Waymo operates. Such results provide strong evidence in support of Waymo's claims that its autonomous vehicles have the potential to significantly enhance road safety compared to human-operated vehicles. If it wasn't obvious through common sense by now, these findings could have far-reaching implications for the future of transportation, potentially accelerating the adoption of autonomous vehicles as a safer alternative to human-driven cars. Waymo is so assured about their efficiency that they have been inviting other third-party researchers to replicate their own results. While Waymo's analysis of millions of miles of fully driverless operations yielded impressive safety results, it's important to note that the journey wasn't entirely incident-free. The company reported that over the entire span of 7 million-plus miles across Phoenix, Los Angeles, and San Francisco, their vehicles were involved in only 3 crashes resulting in injuries, 2 in Phoenix and 1 in San Francisco. Fortunately, all 3 injuries were minor in nature. Obviously, continued research and testing will be essential to ensure the reliability and safety of autonomous vehicle technology as it becomes more integrated into everyday life, something the company preaches every time it has a chance. The current state of the self-driving car industry indeed faces significant challenges and uncertainties. While autonomous vehicles are being tested and operated in a few select cities, widespread adoption and public acceptance of the technology remain elusive. However, as technology continues to get better, we can expect Waymo to grow in new regions. Now, something that I have noticed over the past months is that, when it comes to talking about Google, all the discussion seems to be around the subjects of AI and just how bad management is, and we will be addressing these 2 things later on this video. However, I do have to note that when I looked through different analysts' takes on Google, I seldom encountered people talking about Waymo, which is absolutely mind-blowing considering this isn't just untapped potential for the company's revenue, but a guaranteed one. Let me explain. Waymo's ability to generate profitability is currently set to be anywhere from 5 years to about a decade. You need to think of this from the sense by which investors saw Amazon during its early years. Scaling at a national level, let alone international, will take some time and a crap ton of money. Good thing for Google is that it can afford to take that financial hit in the short term to secure growth and a strong market lead in the future. While Waymo remains in its growth phase, I do not expect it to yield any profitability, but as time passes, it will be. It's just a matter of scaling in the beginning before settling and really taking over robotaxi. Now, the real big goal for Waymo would be consumer cars. That's the key market, and something that we have very limited data at the moment. Again, we have seen it be successful in Phoenix, Arizona and San Francisco, California along with a couple other handful of cities, but the United States is very broad, and just because it has had success in these cities does not mean it will be across the entire nation just yet. However, one big factor you need to consider is that Waymo wouldn't need to tap into the consumer cars market to be successful, not by a long shot. Simple working as a delivery or taxi service would be more than enough. Check this out. Uber generated about $10 billion in revenue last quarter, of which it had to hand out 75% of it back to its drivers, of which it has about 5 million people. This self-driving technology would not only get to keep that entire margin without having to share 75% of its earnings back to drivers, but would actually be more efficient given that it would need even less cars on the road to generate the same amount of revenue. An MIT study showed that a simple fleet of 3,000 ride-sharing cars could replace all 13,000 taxis working in the city at the time the research was conducted. Think about that for a minute. Ride-sharing could reduce the total amount of cars designated to provide that service by more than 3/4. That means more efficient road trips, meaning less time to travel, which would revert back to Waymo saving more money as well. The disruption in the car industry that Waymo will have will be of magnitudes similar to that of Amazon. Think about it for a minute. These cars will be fully self-autonomous. If consumers were to have these self-driving cars, the cars could automatically leave your house, go get serviced at midnight or whenever you are sleeping so that by the time you wake up, it's back in your garage, cleaned, full tank, tires filled up and ready to go. Just how Amazon revolutionized e-commerce, Waymo will also have the role of revolutionizing the car industry. They are not the only company working on this, by the way, but they are, by all expert accounts, the leading one or one of the leading ones. The potential for disruption is guaranteed so long as this project continues to expand and drive in higher revenue. As of 2023, Waymo did lose about $4.1 billion, which is a pretty steep cost, but Google believes it is 100% worth it for what it could bring in the future, and so do I. This could be a $1 trillion opportunity that I am talking about here. Statista showed that it projects the total value of the global sharing economy to increase to $794 billion by 2031, up from the $150 billion it was last year in 2023. That means the compound annual growth rate is approximately 32%. But don't just think about car trips, think about what Google is, an advertising company. If they are the ones designing these cars, you can 100% bet that there will be advertisements in them, and not just in the exterior, but in the interior as well for people that use them for traveling. That presents another multi-billion-dollar opportunity for Google to maximize revenue potential while also having the ability to tap into consumers and sell them products. Waymo isn't just a direct type of business where all the money is paid up front through a monthly fee or one-time fee. People that use these services will also be the product by which Google makes money by shoving advertisements as they already do with all their other services. Waymo still is, overall, in its infancy stage however, and as I said earlier, it could be years before we see significant expansion, though they are already having success in that. Waymo has still not been priced in yet given investors ignorance of its existence or because they are uncertain of its potential. That is for you to decide, and I highly encourage you to do your own research on this and see if you arrive at the same conclusion I did. However, while Waymo might not be the selling point to everyone, Gemini should be. The era of AI is here, and it's moving so fast that even government regulation cannot keep up with it. Google introduced Gemini a couple months back. AI has already begun replacing workers across many industries, and I strongly expect this pace to rise over the coming months and years. Goldman Sachs says that according to their analysis, AI stands to replace the equivalent of 300 million full-time jobs. However, this number could be a bit exaggerated. Other accounts put the number at around 2.4 million jobs being replaced by 2030. In May alone back in 2023, AI replaced nearly 4,000 jobs, and that number has been increasing. A McKinsey study found that nearly 12 million US workers will be replaced in less than 6 years. The future is without a doubt here, and there is no stopping this. There will be huge changes in the economy, but one thing is certain. If there is any company that stands to really gain from this change, it's Google. Even Microsoft's advances in AI are not even close to being what Google's are. Think about it. How much more dependent will employers be on AI services to get the job done? AI has already begun to change the way we browse the internet. We have seen a remarkable growth in the number of people using chatbot AI to look for answers. Given that Android, Google's mobile software, holds the biggest market share in the world, they will be able to force consumers into this ecosystem. This is a problem Microsoft has to contend with, because even though they have made good leaps in AI technology, they don't really have a way to tap into consumers outside of Windows, which is rapidly shrinking in market share worldwide. They also lack a phone product by which to help push Copilot or OpenAI, whereas Google could simply embed Gemini in every Android running platform and keep people there. The amount of data that is compiled by a company like Google is crucial for the development and growth of AI, and Google has no real competition to its browser. Because of this, Gemini stands to have a lot more information coming in that will allow Google to tune AI in a way that leads to better results, more engagement and more dependency by its users. According to experts at the IDC, the worldwide artificial intelligence software market is expected to grow from the $64 billion it was in 2022 to nearly $251 billion by 2027, a compound annual growth rate of 31.4%. However, these numbers have been disputed as being too conservative. Bloomberg came out with a report that showed that by 2032, generative AI will be a $1.3 trillion market, a figure that lines up with other market estimates. Once again, of all the tech companies out there, Google has the best AI product because of two main reasons. One is the fact that they have been working on AI for over a decade now, and the other is that because about 83.5% of the world uses a Google product, whether it be YouTube or Google Search or any other, the company has the capability to consistently get information to help improve its services and therefore keep customers coming back. Simply put, AI is already changing the landscape of the world. It will affect every sector and industry out there in the market, and of all the competitors out there in big tech, Google has the most advanced product. Now, we all know that YouTube and Google Search are winning products that aren't going anywhere, but before I begin to talk about the serious troubles ahead for the company in regards to the current leadership, I do want to take some time to talk about some financial figures. Starting with YouTube, the company has seen continuous growth ever since its inception, and by all accounts, it is poised to continue uptrending. For the year 2023, YouTube had revenues of $31.5 billion. It reached 2.7 billion active users in 2023. YouTube Premium also recently reached 100 million subscribers. YouTube is a force to be reckoned with, and it will continue dominating into the future according to all sources. As for Google Search, Google.com was the most visited website of 2023, a shocker to no one. It was visited 89.3 billion times every single month. Google had a staggering 91.5% of the global search engine market, with its closest competitor, Microsoft's Bing, coming in second holding a mere 3.48% of the entire global search engine market. On mobile search, Google commanded a dominant 95.4% of the global mobile search engine market. Google.com's advertising revenue brought in over $48 billion during the fourth quarter of 2023, and for the full fiscal year, it brought in over $175 billion. As you can see, Google's search engine absolutely dominates the search engine business, and that isn't expected to change anytime soon. Just so you are aware of, other income sources for Alphabet included Google Network, which brought in another $31.3 billion. Google Cloud brought in over $33 billion, and Google's other ventures and products such as the Pixel phones, Nest devices, Play Store purchases and other non-advertising sources brought in $34.7 billion. As you can see, Alphabet's core business is very stable, dominating in many areas such as search through Google.com, entertainment through video format in YouTube, and being the market leader in mobile through Android. On top of that, we also discussed how two of Google's projects have the capacity to potentially help the evaluation of the company grow trillions of dollars in the coming years, as it boasts its AI power and its self-driving technology. Google is a growing company and by all accounts, should be heralded by the markets as a must-buy with increasingly optimistic outlooks, but that is not what's been happening at all. In fact, Google's image is rapidly deteriorating as calls for Google's CEO to step down increase. The fundamental problem that Google seems to have lies in the fact that it is severely struggling to invent the future. An interesting piece by The Verge said that Google is losing its stomach for big bets and experimentation, and is instead trying to focus its efforts on what makes money today. Emails from the company's CEO seem to give the impression that he wants employees to simply work harder and find ways to cut costs, essentially becoming more cost-efficient, rather than trying to use its resources and talent to take risks and bark up trees that may bear future fruit. This impression has significant effects for a company such as Google. According to a report from The Information, recruiters looking to hire for startups are now starting to look away from Google because they have the impression that their employees' skills are mostly tied to maintaining legacy products rather than building new ones. Google is infamous for giving up on projects shortly after they launch. The company's culture is one that has a strong rejection of anything that doesn't immediately yield in profits. For example, the company announced Stadia and just a couple years after, decided to move away from video game streaming services altogether. These are multi-billion ventures that the company simply decides to step away from without really trying to make them work, simply because they are a cash cow, and without any of them showing significant promises at launch, the company decides to turn the lights off and move on. Stadia is far from being the only one. Google killed Pixel Pass 6 months ago, which was a program that allowed people to pay a monthly charge for their Pixel phone and upgrade it immediately after 2 years. It killed Google Currents, Google On Hub, YouTube Originals, Google Street View, Google Hangouts, YouTube Go, Google Duo, Google Chrome apps, and so many others. In fact, there is a website called killedbygoogle.com that is fully devoted to simply listing and detailing every single project Google builds and kills, and as of early March, there are over 293 listed projects there. As you can see, there is a very serious problem with the way Google is carrying out its business, and it comes right from the top. Again, this is not to say that all that Google makes is bad or will die, but it sets the undertone and it kind of makes investors weary. Let's reframe this argument. Let's instead list what the problems at Google's management are one by one. First and foremost, Google has direct competition from Microsoft now. Last year in 2023, Microsoft launched ChatGPT, which caught Google off guard, forcing Google to quickly make a competitor in the form of Bard, as pressure came from pretty much the rest of the world as to why they didn't have anything ready. Of course, Google has been working on AI for over a decade now, but it doesn't mean they had a fully working product then. As such, this allowed Microsoft and OpenAI to have all the press coverage, all the market optimism, and obviously, the increased appeal and market valuation. The spotlight was on Microsoft, not Google, when it came to AI, which, given that this is Google's bread and butter, led to serious arguments against the company. Last year, something interesting happened. At the annual I/O Developer Conference during May, Google's CEO Sundar Pichai revealed a lot of new features and improvements to its services. He mentioned a powerful family of AI models under development, which is now what we call Gemini, and talked about the different capabilities it had. However, Pichai was noted as dancing around the most important topic to people in the audience, which was, what is Google's real plan for Google search? You see, as I said earlier, Google.com accounts for about 60% of Alphabet's total revenue, but with AI chatbots delivering information across the web, and especially with ChatGPT being the popular chatbot, what is going to happen? Well, Sundar Pichai was caught off guard, and delivered such a vague answer that only prompted more skepticism. He said, and I quote, "With a bold and responsible approach, we are reimagining all our core products, including search." He said that and moved on, never returning back to this topic, which began sounding off alarms as it made it very clear that Google had no real answer for this, and this is where the current worry for Google, along with most of the controversies, lies at the moment. Google does not have a strong strategy for search engines among the AI boom. The way things are going, ChatGPT is clearly the popular chatbot and the one that is leading headlines across the media, and we have seen massive growth over the course of a year now. If Google has no answers for this, what does that mean for the core business model of the company, given that it accounts for 60% of the total revenue? This is the worry that investors, analysts, Google fans and critics are all airing out. But this is the least of its problems. In fact, people are asking the wrong questions. You see, if this was the only problem Google had, it wouldn't be that big of a deal. However, it isn't so. The bigger and fundamental problem Google has is that they don't know, at least for now, how to make money from ads using generative AI content. It's hard to push for ads when the way chatbots work is by giving you very direct answers. If you search something up on Google, you will come across a ton of promotional links, whereas with the chatbot it will simply give you the answer. Google's Vice President of Search, Elizabeth Reed, was asked about this, and she said that they are continuing to experiment with ads. The strategy outlined by Reed involves placing ads in various positions on the search engine results page and incorporating native ads seamlessly into the snapshot answer. This approach aims to increase advertising revenue for Google by providing additional opportunities for businesses to promote their products or services to users conducting searches. The issue lies in the potential impact on publishers and advertisers is indeed a matter of significant concern. With the introduction of snapshot answers and other features that provide direct information on the search results page, users may be less inclined to click through to external websites, reducing traffic to publisher sites and potentially affecting their revenue streams. To address these concerns, Google and other digital platforms must engage in constructive dialogue with publishers and advertisers to explore potential solutions that balance the needs of all stakeholders. This may involve revisiting compensation models, enhancing transparency and disclosure practices, and developing mechanisms to ensure fair treatment of content creators while maintaining the integrity and usability of search platforms. These things will have significant effects on their bottom line. 80% of Alphabet's entire revenue comes directly from advertisements. And it's not like the company can rest on its laurels on their other services either. You see, Google's non-advertising revenue is not growing as quickly outside of their cloud service. As you can see, Google's once shining armor is now wearing off quickly, and people are demanding heads at the company innovate and bring new things to help boost revenue and bring a new sense of allure. Even their Android operating system lost to Apple's in the United States, as iOS for the first time became the leading mobile software in the country. And this is symbolic of the issue at the company. Google's stagnation has essentially trickled down to its products. They became so complacent in their success that competition in all angles encroached quickly. As the world quickly globalizes, citizens across the world will have more buying power, and we have seen that when the options are presented to them, consumers increasingly pick Apple products over Android. Not as much as in America, but the trend is there to a lesser degree in Europe, for example. Google has had almost a monopoly on search for about 25 years, but Microsoft came out of nowhere and shook the foundation. With AI chatbots growing in popularity, what does that mean for Google's core ad business model, and what does it mean for its massive lead in search and market share to competitors? Could Microsoft close the gap and grow its ad business significantly? Even if the answers were favorable to Google, it is clear that based on the answers the CEO of Google himself has given along with other workers at the company, Google still does not know, and that creates a lot of uncertainty amongst investors, and it's why the company, as well as it has performed year after year, has so much growing skepticism. There aren't clear answers. The leadership at Google is weak and investors will rather you lie to them being overly optimistic than being realistic about potential changes. And yet, with the risks and concerns about Google now being aired, I think Google is an absolute buy at current levels. In fact, I strongly believe that Google will come out on top, even if in the short term its stock price disappoints. You see, Google has an advantage that Microsoft will struggle to rival, even in its massive success with OpenAI. That is, Google's search business remains intact. We saw during the antitrust case led by the government late last year in 2023 that even when people were allowed the choice to pick new search websites, they still went back to Google over 90% of the time. That is something that you will not be able to beat. That, on top of that fact that the margins and growth of revenue through these sites has not gone down at all, show me the level of strength the company has. But it isn't just that. Yes, Chat AI will certainly present significant challenges for Google in how it can monetize its ads, but take into account that even though chatbots have increased in popularity, visits to google.com did not go down. It hasn't replaced it yet to a point where it's affecting the bottom line. And if chatbots really do replace google.com, by then, think about how many corporations and individuals will be reliant on the AI product to be productive. Remember that AI is already replacing jobs and that it presents more than $1 trillion market, of which Google is most likely to dominate as well. Even if by some miracle Microsoft or even Apple are the ones to dominate that field, Google will still be there as well. That's not accounting for Waymo Technologies, which stand to completely revolutionize ride-sharing and delivery services. Google is very stable, and even as controversies surround the company, they have managed to beat market expectations and show growth. You can argue all you want, but the company is outperforming expectations, and the bottom line is all that should matter to investors. I think it's fair to question the leadership of the company, who has gone from facing an antitrust case with the government to now being subject to social media ridicule given the whole AI images and race controversy. But those are very small and short-term events that have no real consequences. People are not going to stop using google.com or stop watching YouTube because Gemini made George Washington black. You have to be realistic about the extent that these things can affect the bottom line, and as far as I knew, it actually drove tons of engagement in YouTube as content creators mocked the company or discussed what happened, once again, showing that any type of drama is great, regardless if it's positive or negative, because it brings in money. Think of how much money YouTube made every time those millions of people had to spend 15 seconds watching ads before the video started. Google's foundation is too strong, growing and centric. It was caught with its pants down in regards to AI, but the way forward will be led or partially led by Gemini. It has way too much money in its pockets, too many good projects, and it's embedded in people's habit to use it to browse the internet. Google is, as of right now, simply too big to fail. Can the management team do better? Absolutely. Should they be held to a higher standard? 100%. But they are still delivering, and the stock price has remained stagnant because of the controversy. I strongly believe Google will have a strong run over the coming years and that it has trailed the overall market for a while. This company is significantly undervalued. It is lower than it was back in 2021 while the rest of the market went up, and that leads me to think it could have a potential rally eventually when investors see its real value. I will be buying this company's stock and holding for years to come. It is clear to me this company should be performing way better than it has been. Thank you all so much for watching this video through its end. Don't forget to comment and like to help boost it in the algorithm. Join my Discord if you haven't already. Let me know what other companies you would like me to cover. I hope to see you guys on the next one. I want to make another video by Friday, but we'll see. Regardless, you can catch me live streaming here on YouTube in the morning. Until the next one, to the moon.